there's still a lot of liquidity to come from the market. Like we're only like 6 to 9 months into this like liquidity down cycle when liquidity started going down. And, you know, I think the net liquidity function that we've talked about is saying there's too much liquidity in the market. So the reverse repo facility has $2.2 trillion.
Coming down.
Where's your drink, sir? I promised the Alfalfa community that I would make sure you drank.
You are drinking.
I give me 7 more days.
I haven't had a drink since Saturday, and I'm like, delaying it as long as possible. I was thinking maybe I'll.
Second episode, can you do it on the politics and life?
I'm going to need you to drink.
I'm going to need you to drink too. It's Eric's birthday.
It's weird. Like
Birthday
I don't
week.
usually not feel like drinking.
I've never heard such a thing. This is important, Stephen.
Yeah, what's going on?
I kind of need a drink. I was
Did I inspire you?
2:45 last night.
Ooh, there you go.
I could not.
Alcohol
sleep.
helps.
I was so wired.
Because I wanted to cheer you guys, cheers you guys.
Markets.
All right. Well, I still will, even though you're drinking a goddamn limoncello.
Okay,
Guys,
Mr.
7-8 weeks fucking apart.
Cheers. Good to see you guys.
Oh, we're back.
That was weird. Literally, it was like, you're gone, I'm gone, he's gone, you're
Nick's
gone. It was like,
gone.
When was I gone? Never.
all right,
answered.
Steven.
Have you
I am
never
the-
missed?
I am the Rock.
Wow.
I missed one episode in Tulum, unfortunately. I wish I never did it. Now I can't.
It's our
You're sad
highest
about
downloaded
that, huh?
episode, actually. Okay.
You walked out in the middle of one recording for
I
a
did?
concert. Yeah.
Oh, the Collective Soul concert.
We'll let that guy slide.
Well, we're still doing, we did good. We made it work. Like, we made all this work. It was hard having someone remote, though, each time. It changed the vibe. The vibe is
does.
back. We got a lot done. Guys, I set up, you know how I was talking about Mercury and our e-commerce, our Steal This 8-Figure Business episode, and you were intrigued? So I set us up on Mercury.
Saw you did that.
Yeah.
You
Good.
crossed off like 6 task lists.
Yes.
So was that very easy
I like
to do?
getting dude, it's so easy. And I want to actually mention this to the community. So anyone who has a business should absolutely check out Mercury. I have 4 entities there. Now Alfalfa is the 4th one. It literally was a process of going to the website, putting in my personal information, putting in the EIN or tax ID of the business, along with like one sort of document that proves ownership. It could be articles of organization. It could be a partnership agreement. It could be anything. And you're set up and good to go. We're talking about like modern banking for business. Like there is no such thing that exists like this in any other arena. And I'm actually an investor too. I did their last round. And yeah, you guys should check them out. Use our link and you'll get money and we'll get money too.
Really?
Yeah.
Oh,
I got
wow.
us a link. Mercury.com/alfalfa.
Wow.
I believe the deal is you spend like $5,000, $10,000 in the first few months that it's open, and you'll get back $250. And so will we. And definitely going to be plugging Mercury as much as possible because I fucking love those guys. And I also hope they IPO.
Pump
that
your
my
bags.
investment does well. But seriously, like the pain
bags.
of a business bank having to walk into Chase or Bank of America or your local credit union and the shit you have to go through, the documents you have to show up with your co-founder or your business partner, sign documents in person. You don't have to do any of that on this. It's all just like automated.
I mean, that's been my experience every time.
I know.
Go into the branch.
It's terrible.
Yeah.
So, yep, mercury.com/alfalfa. And yeah, we're in business, guys. We have an official LLC now. So, hell yeah.
Hell yeah.
Mm-hmm.
Now we
So-
start harvesting all those losses. Nice.
So, what are we doing?
Yeah, are you guys hiring? Because I'm.
Let's do the alfalfa round and flow right into this markets discussion, Stephen. What do you think?
Sure. Does anybody have good alfalfa?
Yeah, I feel like Nick does, actually.
I feel like Nick looks like he's got some.
So I don't know if I have anything actionable, but I did do quite a bit of research on new general partners for multifamily and storage units. Like, I realized I should probably talk about that more because it's the largest like single part of my portfolio is that asset class, not actually crypto. So I should probably talk about it slightly more. So anyway, reached out to, I don't know, I think like 10 or 15 new multifamily GPs and another 2 or 3 storage GPs. I have my like little interview set that I do with them. So scheduled out some calls over the next few weeks and hopefully we'll find some goodies, new deal flow. I don't think now through next year is a good time to be putting into like multifamily, maybe some storage deals, but not in the next 6 months. The market is just repricing all over the place. Like,
And why do you go to new GPs? Why are you always looking for new sources? Is it just because there's not enough deal flow with the existing ones, or because of is there any diversification factor there?
I mean, I think it's good to diversify
Yeah.
against GPs, because I've had some concentration start to build because they grow the value at 1031s. The next one, you're like, oh my God, I have a lot of money with this one GP. Hopefully it's not the Madoff family managing these these apartment complexes. Luckily, got some good people managing them. But that, and then I think in general, more deal flow is always good, because the more opportunities you see, you might be able to pick off some really good opportunities. I also think as an LP investor, you're not really managing any of this, but the more reps, the more deals you see, the more your queues might be up when you see a good deal or really bad deal. So anyway, I think more deals, the better. So I'm just trying to build up a solid pipeline over the next 6 months so that, later half of next year, might be 2024, who knows?
What about extending out beyond that? Do you prefer multifamily, that segment over like
There's
commercial,
others.
industrial, like?
So I have industrial GPs. I have 2 of them that I'm just on their list. I've never invested with them. But those 2 are centered around Texas, but it's industrial space. So a car mechanic, auto body shop. It could be an AWS warehouse. That type of work is really good. They get good cash on cash, good IRRs. But I think for now I'm more storage focused because I feel like it's slightly more recession proof. I also went back and looked at like 2008 data. People move when they buy homes. So home buying is going to go down. So it will take a hit, but I don't think it's going to get hit as much as the other asset classes that I invested in, like multifamily or like even in industrial, because like moving still happens when you downsize, deaths, new family members joining the family, storage units get used up there. So, I think I would like to see more deal flow in those. And my goal is to build up. It's interesting. The market structure of these guys is like lawyers, right? There's no monopoly or oligopoly. It's like there's 10,000 lawyers out there, and it's really hard to go after them. And I'm gonna try to find as many as I can. It might be like 2,000-3,000 of them, but I'd rather have them introduction with them, get their notes down. Like, do they 1031? What types of deals do they do? Do they do their own property management? Do they outsource it? Like all these things that you typically look at, and then put it in one big deal pipeline so I can at least see all the opportunities. Anyway.
Would you ever consider doing this yourself? How much are you paying in fees? Could you pivot to like a little mini retirement career?
Maybe. I think you'd have to have
thought about that, yeah?
Yeah, I mean, I think you have to have a strong edge there, like an edge in real estate or property management.
Knowing that. Yeah.
But then you also have to be in that location potentially to start off. I think it probably helps when you're starting off. But I do know there's an advantage, a tax advantage, when you are classified as a real estate investor. I think it's like something like minimum of 500 hours in a specific property. You could take that depreciation write-off, which is typically as an LP only you can write that off against the cash flow that you get from that property. But in the situation where you're a real estate investor, you can write that off against all of your income.
Ordinary income.
Your salary
That's
income.
the alfalfa right there.
Whoa.
All of it. So I may end up buying, like in the future, not right now, but like a rental property and try to cost seg it out, accelerate the depreciation, and then who knows how much depreciation will be there.
Manage it actively.
For sure.
Yeah.
Actually do it,
Yeah.
It doesn't have to be, I think there's rules to get out of the minimum of 500 hours. Like if you're the person who works on it the most, that's also, I think there's a rule around how that fits in. So anyway, I spent a lot of time like digging around, trying to find general partners and weeding out the shit coins of real estate general partners. And we'll see what we get. And then I've been like sizing up and down this Cardano short, trying to manage some risk, but also I think it's going to be a juicy one. So I don't know, just trying to manage the risk that this thing could still scam pump.
It's not the future of France.
Right. Anyway, so a little bit of very responsible investing work and then some very irresponsible investing work, but I feel like they're sized appropriately. So anyway, that was a week.
That's cool. I didn't do anything responsible.
Did you do anything this week?
Yeah, I spent like all day on Monday or Tuesday trying to exit very sizable short portfolio. Got out of.
You got out in time, just in
Were you
time.
exiting as the pump was going up? Is that
Yeah, kind of, but like it was looking sketch, and it was God, I forget what night it was. The week's just going by at this point, but like yeah, I closed out like a bunch of stuff, and yeah, Uber pumped yesterday. I mean, I still get a little bit wrecked on some stuff, but I think I was basically delta neutral when it happened, and then ETH pumped so hard that probably made nothing. I basically just round tripped the entire like last month and a half. It's very, very depressing. I think
That sucks.
I caught like a 20-25% move, like very, very perfectly, and then just
right? I have a question. So you go short or long in your main portfolio, like right? You don't have a smaller section of your portfolio where you do the degen work, because like I kind of structured in two separate kind of portfolios almost, but you do you'll go short in your big bag.
yeah. I mean it. I mean I literally have separate wallets and trading accounts. Like the way I mentally think about it is that I have a like longer term sort of swing trading thesis. Like that trade that I round trip was like it was like a quarterly trade. You know, I got a really good entry right around that nasty CPI print and caught that entire move, and then kind of gave it back. But then I also do like shorter term stuff on like a smaller account, and I size my positions on the basis of like basically like my entire investment portfolio, like real estate excluded. And I'll use like larger, like I've probably risked like 2 or 3% on the quarterly stuff, but I usually risk between like 0.25 and 1%.
I have another follow-up question, selfish based. Let's say that smaller bag that you have, if it ends up doubling or tripling, do you reallocate? You say, okay, now I'm going to drop the size of that smaller bag and move that to the big portfolio, or do you keep it? If it doubles or triples up, do you keep it there and just keep tactically trading, doing degen stuff with it?
I mentally keep it all the same. Like I lump like my spot bags, my swing account, my short account, all my wallets. I lump that all together into like an investment account in my head, and I'm risking a certain percentage of all of the sort of liquid tradable assets I have when I'm doing stuff.
Cool. Thanks, dude.
So I guess maybe that's some alfalfa. I don't know. got more, but I feel like we're going to talk about stuff. So.
Mm-hmm.
Yeah, I can go next. I just got back with you guys here into San Diego. I was gone for 6 weeks. Traveled. Yeah, thanks. Traveling a lot, right? So I drove halfway across the United States.
Well, the wedding.
Yeah, so
I was gone like 2 weeks before the wedding.
2 weeks before the wedding, and then I came back here for 2 days, recorded one episode with you guys just to pack my bag to go to Europe, and then bounce to Europe. So I haven't been home for 6 weeks, pretty much, and I'm tired. But but what I saw when I was doing that, right? So in the United States, I went to the casinos in Vegas. I was like roof-topping in New York. We went shopping down the Champs-Elysees. I feel like I have a good finger on the pulse of the consumer right now. And what I'm seeing, like from the last 6 weeks, is there's no sign of a recession anywhere that I've been, which is a lot of places. I've been over 20 cities in the last 6 weeks. I've seen nothing but just like heaving activity in all of these areas. And, I think if I were to extrapolate that, it seems like there's no inherent need for a Fed pivot anytime soon.
I think the data probably supports you there too.
Yeah, the data and the heuristic sort of aligns there. So that's my thesis.
Any carb alfalfa from your trip in Europe? That's what I really want.
Well, I on several episodes ago, I said that I've never lived without a six-pack of abs. And now I'm just like a round ball of pizza dough. And my alfalfa is like,
as one should be after
don't
Italy.
do what I did. Like I literally ate carbs and cheese every meal.
Wonderful.
Dude, Italy is like caffeine, carbs, just of any sort.
Uppers and downers.
Yeah. Gelato. It's just that's the whole cycle. It's
Yeah.
just like pizza, gelato, espresso, pizza, gelato, espresso.
I'm
pasta.
blown away at how these guys in Italy, like the Italian folks, like they don't eat other food. Like every restaurant there is a trattoria, osteria. Like every single restaurant sells pasta and pizza. And I'm just trying to think of like who's the guy who's like, I know what's gonna kill here. A pizza shop.
Why is no one fat?
Well, because they don't have like Fridays or Chili's level sized portions. It's not like,
Yeah.
you know, you eat a full meal, then you have half the meal to take home to eat for the next 2 meals.
So let's continue this for a second. I have no money, Alfalfa. So no moves, nothing. I have some things I'm gonna do next week, but I'll just save them. So I just got back from Amsterdam, right? It was a quick, short, 4-day trip or something like that. But in the entire time that I was in Amsterdam, I probably saw 3 overweight people. I mean, I'm talking about my eyes scanned thousands of people. I saw probably 10,000 people, right? And
Well,
I would
by
actually
BMI,
say,
you're a little overweight, sir.
BMI is like, so if you really think about it, if you look at it from a numbers perspective, I would say 1 out of every 200 people, I'm being liberal, was like looking slightly overweight. It was insane. Whereas you look at what's the latest data in America? Like, what is the obesity level?
I don't know. I think like it's probably safe to say like a third
I think
are
it's the third.
conservatively diabetic or pre-diabetic.
Something is wrong with the way we're living.
Do they not use seed oils or something? Like that's sort of the latest thing. Seed oils.
Yeah. Are we gonna? I won't say his name. Stephen will too much free press. But that's one, I think, of the variables. But I think there's many. It's the lifestyle, the walking, the sunshine, the activity, the bicycles, the ingredients in the food, the source of the ingredients, the organic versus non. I mean, just all of it, the processed nature of food, the restaurants we go to, the way they serve the meals, the portion control, the number of meals throughout the day, the natural sort of like fasting, intermittent fasting that often takes place in some societies in Europe. There's just it's a compilation of all those things done right. And then, of course they integrate they take alcohol in a very relaxed way too. Here it's like binge drinking.
Oh man.
I forget the source of this quote, but I think it was a tweet actually. It was like, if you want to understand a society, look at the chemicals and drugs it consumes. And it said, okay, Exhibit A, America, caffeine during the week to work as hard as fucking possible.
Yep.
Alcohol on the weekend to black out and forget about the week.
So I noticed this because when we were in France and Italy, like everyone is just drinking wine. Like everyone, all young people are just drinking wine. And I was starting to think about it, like, well, who gets like really fucked up? It's all like the British colony, like the former British, like Canada, America, Australia, getting all fucked up.
Yeah.
England.
We're very immature
Ireland,
about alcohol. Yeah. Much more so. Anyway, this is a money episode. So let's go to that.
Oh, money.
Hi.
You guys want to talk about money?
Yeah.
Yeah. Welcome back, Steven. We're talking about money. He's back.
All right.
All right, where do we go from here? We got some finicky markets to talk about. I don't know. My kind of like prevailing thought is like the market's talking about there's a pause coming, and I think they're getting prematurely aroused about it. And I think we're gonna, I think people are gonna realize, okay, if they slow down to pause, that's still not necessarily good. If we stay at a 5% Fed funds rate for the next year, that's not going to be good. And so I think the narrative will shift. It's going to take some time and some maybe deteriorating macros and macro data and earnings data. And I think early in this year we went from peak inflation is coming to, oh shit, it's sticky and a slow decline. I think we'll go from a pause is coming to, oh wait, 5% for a year still sucks a lot. So I don't know. That's just my general thought. We can go into some of the data I picked and pulled, but
I mean, you're positioned short, right?
Not net short. No, just in that one that Cardano short is that. Well, I do have
Charles.
I do have that SH ETF, which is the inverse S&P, and it's just kind of hedging. Like I said, JP Morgan's like still they have bonds, they have S&P 500 in there, and then have the puts to hedge them. So, when the market's up, I'm net up, and when the market's down, I'm kind of just still down, but down less.
It's bold of you to still be in the market right now.
Well, I think most investors are just like long only or net long. Like I think this is very common. I think it's actually very uncommon to be like all in or all out, which is like your style.
Yeah.
I'm not
very.
saying it's common. I'm just saying like Nick could do it.
Yeah,
He's just
I could.
yeah,
Yeah.
I got stuff to do.
I mean, and,
Which I respect.
I mean,
That's good
part of me is
respect.
like, I should be able to make more if I just work on my active businesses and not meddle too much in my, you know.
Active business.
And like, frankly, a lot of those longs, like if you give them enough time, they are gonna.
And those have a
come
long
back.
time horizon. Those
Yeah.
are decades, not
Right.
even years. So,
Right.
that being said, I wish JP Morgan would have done a better job with like just drawdown risk, you know, even just putting more of the portfolio in cash. I
Yeah.
like want to give them an encouragement call, like you could still take your fee if you're all in cash. You know,
Yeah.
if you think that's the right thing to do, just do that. I don't really care. Just like protect
they just
big
like
drawdowns.
benchmark, right? They're just like, yeah, we beat the benchmark by 1%. You're like,
Still down
and the
24%.
benchmark's down 25.
Yeah.
Cool. So that's fun. Yeah.
Did you notice the? I don't know if you guys have paid attention to this, but the 3-month and 10-year
Getting
just
very
started
close.
to invert.
little nibble?
Invert.
Little
And so
inversion.
the 2-year and 10-year is kind of like one that's talked about a lot, but the 3-month and 10-year is the one that's most predictable of upcoming recessions. And granted, it's been there for like a day or two, so it's probably going to need a few weeks, some kind of meaningful inversion. But I think it's interesting that we're starting to see some of this macro data start to deteriorate, and this shows up now.
It's like all over the place, right? Like, didn't UPS report like stellar earnings?
I didn't see theirs.
Visa yesterday. Did you see that?
Visa is good.
Oh.
Microsoft
Down.
Microsoft
no good.
and
Google.
Meta's down 20% in after hours.
Ugh,
How about Google?
Down.
down,
Missed revenue and earnings.
down. It's like
YouTube revenue actually declined. It didn't like everything else
Feels
slower
important.
growth, but like
So I wanted to actually talk about this Visa
Feels
thing. I
very
made a mental note to do it. And one thing that I noticed, well, first of all, revenue's up year over year. That's surprising. Like if this is like a recession, we're clearly not in a recession. You know, this is like people spending money. The other thing I noticed was that they have a free cash flow yield of over 60%. And this tells me like this is a very bullish crypto narrative for me, because like Jeff Bezos, like your margin is my opportunity. DeFi, crypto, like can start to eat away at that massive margin.
well, it's interesting that you mentioned, you know, heuristically a strong consumer, right? And you look at some of this data of like, okay, if interest rates, we just saw a pretty sharp rise in interest rates in a short period of time. And so I saw some charts that had some correlations. If you look at like real rates on the 10-year and forward S&P multiples, the current real rate corresponds to like a 12 multiple on the S&P 500. We're currently at a 15. So that's a big drop,
Yeah.
but it hasn't happened yet.
Right.
If you look at mortgage rates, they're over 7%. Whenever you see a rise in 7%, that correlates with a 20% decline in housing prices, but that hasn't happened yet. Unemployment, when you see like the home builder sentiment, it was at 90 out of 100 in 2021. It's currently around 40, and that correlates to like a 7% unemployment rate, which hasn't happened yet. So, you know, I think we're just seeing that some of these impacts are going to be quite lagging. Which, back to your original point in the Alfalfa round, that the Fed has I don't think going to see any reason to pivot both on rates or any kind of liquidity.
I mean, the main case
Functions.
for a pivot is probably like that like some of the recent housing data looks very bad. So you could argue that they have 2008 PTSD, maybe.
But you could argue that they want that. You could argue that they want.
They are definitely more cool with having stocks go down versus housing go down. From what I understand, like way more cool with having stocks go down.
I agree with that. But
how-
I was actually thinking today that like stocks have all come down, but really what's getting crushed is tech. And tech was what was zooming during the pandemic. So I think everything's kind of like working out the exact way they wanted it to. Like,
Well, it's sort of like that's the most confusing thing to me is that like when you try to parse what's happening, things like sort of make sense, but then they don't. Like you look at a chart of ARK, that thing is like dead. It's down like 2020 levels. You're like, cool, that totally makes sense. Meta, like lower than it was in COVID. seems even harsh, right? But then you've got like absolute nonsense in crypto still trading at massive. Like Cardano was like 2 cents.
Well, what was the one
I
that
think,
just
when
launched?
Facebook was at this level.
What was the one that just launched like a week ago?
Aptos?
Aptos, and it's like at $10 billion FDV before it. I don't know what it is now, but it was.
Yeah, like
10 billion.
I'm wondering like when is that gonna happen? You are starting to see a lot of separation in the market between like the DocuSigns and the Metas of the world and some of the more premium companies that like make money in a sort of real recession resistant way. Like they're moving molecules instead of moving bits.
Yeah.
I guess is the analogy. We're moving to like a molecule based economy versus like a bit based economy, and that's probably going to keep happening. But yet crypto is not down that bad. I know this is probably like shocking to some people listening.
But when you look at the lows compared to other things like their June
when
lows,
you compare
the pre-COVID
you
lows.
compare like something like sure, I'll just keep stepping on Cardano, I guess. But when you
Please.
compare something like Cardano to something like Facebook, like one is like a real business that like generates cash flows, has like some sort of model, has been around for, and the other is just like basically vaporware.
Like
at
can't
this point,
even build a
with some
smart
guy
contract.
who like farms in Africa and like pretends that he's like 50 even though he's like 34 and just tries to look older. It's just so weird. It's just like basically like an internet cult. Why is that still trading at like 20 times its like pre-COVID levels, and if Facebook is lower than its pre-COVID?
There's still too much liquidity in the market. Maybe
I
mean maybe that's
I
a
feel
sign.
like there is, which is why like these moves have been driving me nuts lately. Like that we had that nasty inflation print right in September. We're basically back at the same levels, right? Aren't we at the same level? Like is the world better now? Like, no. Like if anything, I think like there's been more data that's come out that says like actually the economy is like extremely resilient. Employment is extremely resilient. Household savings are like through the roof. Like a lot of corporate margins are still very high. Like I don't get what the market is doing at the moment, and I get this is a bit of like a confusing time because we're in this. When you're dealing with like markets, right? There's all this stuff happening under the surface that people aren't aware of, right? You've got the macro stuff, and sure that takes a while to play out, but like in the short run, you've got all these like flows happening in the market, right? You've got like end of month rebalancing. These funds are doing things. You get options markets, which are just massive,
Ripping.
now. Yeah, and like I've heard like single day options are like just absolutely mooning. Like people are using like single day expiry options like at a rate that is just exponentially more than has ever been done before. I don't even know how that works with the some of this stuff. Like it's really weird. That to me is like another sign of froth in the market. I saw Bank of America said that like retail flows in the stocks like a few days ago are like mooning again.
So all this leads me to believe that like I want to be net short for a longer period of time than we imagine, but it's like all this fuckery. I don't want to just hold short. Like I want to wait and be opportunistic about when I enter a short. Like after a pump like this, maybe this goes higher, and I'm still just flatly allocated. I'm not short at all, but like I will get back on the short side after I see some more like pump like this. I don't want to just like sit there and hold it and just.
I mean, yeah, I agree with you. I think there's still a lot of liquidity to come from the market. Like we're only like 6 to 9 months into this like liquidity down cycle when liquidity started going down. And, I think the net liquidity function that we've talked about is saying there's too much liquidity in the market. So the reverse repo facility has $2.2 trillion
coming down short, like just
right. But
slowly.
there's still over $2 trillion in there. And when you think about it, that's money market funds parking it there.
Right. That's taking liquidity out, right?
Right.
Yeah.
It's taking liquidity out, meaning we don't need to use that liquidity, and for the amount of risk appetite they have, they're not willing to take risk with that money, so they're willing to park it there. And the crazy thing about that is that banks are also kind of saying they have enough liquidity, because if they wanted that money, they could raise the deposit savings rate, right? They could say, hey, we're going to give you a higher yield on your deposit to move that from a money market fund to your checking and savings account in the bank, so then the bank can then go lend it out. But the banks are not even though rates have increased, they're not increasing you haven't seen Chase come out with like a 1% savings account or like increases. And I think that means they have enough liquidity for the amount of risk they're willing to lend out and participate in the market. So I think that net liquidity function is going down, but in and of itself, it's saying there's enough liquidity for the amount of risk that the market is willing to take. And I don't think that's going to change until, people see their home prices going down, people see their 401ks going down, and then they maybe change their purchase behavior, maybe a little capitulation, and then we kind of continue through this cycle. I had the first normie ask me, so my 401k is down 20%, what should I do? And I'm like, well, why do you bring that up? He's like, I just keep watching it, watching it over the last 9 months, 10 months, it's going down. I'm getting nervous. And so he's not at the point where he's like, I'm just going to sell it because I just want to be safe.
Yeah, it's funny that
but
you mentioned
another
that,
10%, it could.
Nobody's asked me that.
Yeah.
And like people ask me finance stuff all the time, like especially in bull markets. Should I buy this? Should I sell this? I haven't had anybody say anything to me about anything in a long time.
Right.
So I don't know. It's like bizarro world out there right now. It's very hard to make sense of what's going on because it's like the world is ending, but also there's just cash and liquidity everywhere. It does seem like at any second, like if we just turn on, maybe this is what the Fed is like terrified about. Like maybe they do see just like this incredible tidal wave of money that could just re-enter the system and just send everything absolutely to space.
I think GDP numbers come out tomorrow. So today's Wednesday, October 26th. I think there's some GDP numbers coming out this week or next week, and it's going to be a positive number. It's going to be growth, and so it's going to be interesting what narrative develops from that number.
We have what? We have FOMC next Tuesday, Wednesday, and then we have inflation on the 10th. Then we have an election coming up. Like there's.
What happened with nat gas in Europe?
It went negative.
It was like what does that mean? The
That was
price?
weird.
Yeah, it's a similar phenomenon to
Netherlands, where it just was.
what happened with oil a couple of years ago, right? There comes
Where
a
like the carry cost
like
goes.
like LNG, liquid natural gas, is difficult to like store and transport. So like if you, it's not like you can just roll some barrels into your mom's basement and like keep them in a garage for a while and collect some premium or anything. So yeah, and the other thing too is that like people can substitute other stuff for it. Like you can substitute oil for nat gas, and I don't know, the supply that came in response to those high prices, which this happens a lot in commodity markets, right? This is bullwhip, right? You get this massive spike in price and it induces all the supply to happen. And then I guess the weather in Europe has been much warmer than anticipated. So the demand has sort of fallen off a cliff while like all this new supply has arrived. I think it's a temporary thing, but yeah, it caused quite the crazy swing in the markets there. But I still do think Europe is kind of screwed, but it's like a lot of this stuff is longer time horizon. We're obviously going to get a recession, but maybe like Q3 or Q4 of next year.
Right.
I don't know.
Yeah, I'll give you one point.
Next winter.
I think we talked about like German manufacturing a bit on one of the previous podcasts,
Yeah.
but BASF is a big manufacturer in Germany. They produce a lot of the raw materials that go into other manufacturing processes, and they are permanently downsizing their workforce in Germany because of energy prices. So that will take time to kind of filter into the economy. So I think like the timing here is going to be tough to predict, but I don't think any of that is actually priced in. But along the way, we're going to continue to see these rips.
I have a pragmatic question. So one would have probably liked to do this back when ETH was at 4,000 and, obviously drop down to lows.
Buy more.
Drop down to lows of, below 1K. The basis of my question is like the typical crypto investor goes ultra long, or doesn't have the time, like a Nick, which is kind of the camp I fall into, and also a lack of interest in being that active of a trader. Perhaps sometimes they set up these like degen bags for themselves to play around with, and as I said, I did that mostly just to give myself the ability to like play with different protocols and experiment and go into L2s, do what I want to do, and just kind of generally experiment. But outside of that, the typical crypto investor doesn't go back and forth between like, all right, I'm going to be long, I'm going to go short, I'm going to go to cash, so on and so forth. At this point, though, given everything that we're seeing in the market and to what you just said earlier as well, Eric, which was, I think you basically said, I'm not ready yet to go net short. Or what were your exact words? You
Yeah,
said?
I have been short for a long time, but
Right.
I closed all the shorts just envisioning like what we're seeing now, which is just like high volatility spikes in either direction. And I just don't want to trade when there's like a period of no volatility.
Yeah. Yeah. So my question is, for the person who doesn't want to, I mean, literally just speaking as myself, a selfish question, it's like you have the majority of your crypto portfolio invested in crypto. And something most people don't consider is just simply going in and out of just taking a large chunk of it and going into cash, going back into ETH and Bitcoin or whatever else they want to go into, and just playing that on a 1 month, 2 month, 3 month sort of time horizon to just maximize the amount of crypto that you hold over the long run. Looking at what we just said, everything you guys just described that's going to happen over the next year, if really we're not going to feel recession until Q3, Q4, how would you approach that? Would you even consider such a thing? Would you start to move into cash in preparation for that time? Or how would you even time such a thing?
I mean, I think that at the most basic level, you want to survive the bear market so that you have more cash to buy.
To deploy on these dips, because one of the problems for a lot of people too is that they buy the dip, buy the dip, buy the dip. And I did that a lot in 2018. And it's like...
we all played that.
Yeah, and it's like you're just chasing it. And then really the dip that you wanted, you lack the funds to like really back up the truck and buy. So you don't want to do that either, right?
I think like on the most basic level, I'd sell the rips, keep it in cash, and just be patient and survive, and not try to game it too much. And I don't know.
That's my take as well. But keep in mind that these aren't right answers. These are just our suppositions.
Very personal opinion. Like,
Well, yeah, no, that's the point of the pod, though. That's the point of the conversation. I'm trying to understand, like, I feel like we keep it. I want to go into that detail a little bit because it's like most people just sit back and watch this happen. They sit back and watch their 401k drop, and they've already watched their crypto portfolio drop like 70, 80% for the most part. And so they're thinking like, is this too late? Should I just watch this and carry on forward and continue buying the dips? Or is there an opportunity to actually sell and move into cash to a certain degree? I don't know. What do you think, Steven?
I mean, timing the market is really hard.
But you're timing the market all the time.
Sure, but like I do it, like I work like 9 hours a day thinking about it, and people don't do that. I do. Here's the other thing too, is like I would normally say like I don't think crypto has been that hard to quote unquote time historically, like over 3-4 year time horizons, right? Like it's I've done it like 3 times now. My problem has always been selling, and I think that's most people's problem, especially after the first cycle, is they don't take profits. Like I was actually finally good at doing that this year, which is nice. So now I have cash and things are cool. I think most people should be thinking about like just from like a 1-2 year like capital gain stuff. Like I think you should be thinking about where like ETH is going to be like a year from now, like right now, because like, especially if you live in California, you're talking like 20, 25, I don't know, however many percent difference, right, in terms of like your tax rate. That's kind of a sizable thing to consider. That's why, like this summer when we crashed and I bought a bunch at 1,000, I was like, it might not go lower than that. Like you have to consider that possibility. You have to consider the possibility that like the bottom in Bitcoin is in. Yeah. I think that's a possibility. I do think that this 12, 13K range is just so obvious and like so easy to buy if it's there. It's just such an obvious place to buy that it just makes me wonder sometimes if like a scenario that could happen. Like if you think we're gonna have like a Q3, Q4 recession next year or something, and then the market prices that in finally, gets the message before that, like crypto has nasty volatility. Like what if Bitcoin rips to like 40K or something by January or February, and then it dumps like 50% again, but then it just sort of goes back down to those levels, or like that's entirely possible.
I mean, what about sizing your strategy according to the probability? So like I agree with you. There's a possibility that the bottom is in on Bitcoin, maybe 20-25%. So keep 20-25% of your bag and then convert the rest to cash.
You think there's only a 20-25% that we hit the bottom?
That's my personal assessment.
Oh, wow.
Yeah, it's probably accurate. I
That's
think.
where I'm at.
I think that's a fine percentage. Like this isn't like the be all end all, but we talk about this a lot. Like you should use like high time frame moving averages if you're enormous. It's very easy to look at like the 200 week and go, oh, this is below the 200 week. That means historically this is a very, very, very low price. And I get, yeah, it could go lower. Yeah, it doesn't necessarily mean anything. But if you believe in this asset allegedly over the next 5 to 10 years, and like buying it below its like freaking 4-year trend is probably a good play, especially over like 1 or 2 years from now. If you're thinking about that's when I'm going to start exiting, and then all my exits are going to be like capital gains. Like timing the bottom is not necessarily great if it like ends up being that you have to exit everything for like some short-term games. Like sometimes it could be better to get in and just have like the investment for a longer time to be able to like exit and like not get in exactly near the bottom. It's kind of hard to do that anyway. So you're thinking like 1 or 2 years in advance. And yeah, I kind of think like a year from now that we'll be coming out of the worst of it. I feel like that's pretty likely. Yeah, I think the DCA thing into a bull market is stupid. Like people talk about like just buying a little bit every week, and it's really dumb. Like if you've been doing that since like the 2017 bull run, I think you're like not up right now. I think you're down money on Bitcoin somehow if you did that. But I think it's a fine strategy for environments like this, like especially because like probably the bulk of the move has already happened. I think it's like easy mode in the markets is sort of over now. When the markets are in easy mode, it makes more sense to be like trend following. In this case, like this year, it was negative trend following, following the trend down. But like this might be like many months of volatile chop right now. And if you're just a regular person who doesn't pay attention to this, like you'll get like annihilated in that chop. Like if you try to go in and out and in and out, and it'll make the market will make you crazy. It's going to go up and do things like yesterday, and you're going to FOMO in thinking that you're missing it, and it'll go down 40%. You'll be like, I hate this. I'm not doing this anymore. I'm out. I'm just going to buy lower, and then it rips up again, and then pretty soon you're in a straitjacket. So these are the types of environments where I think it's good to DCA. Just be like, I'm going to buy this much every single week and just think and go away. And if you see the price like completely nuke, then just use discretion and be like, I'm going to buy more on this dip because it's a bear market dip. Like buying massive nukes in bear markets over the course of 2, 3, 4, 5 year time horizons is probably fine. Buying dips at the end of bull markets is not. Like they're different, and you have to you make that distinction. So Eric, you think that we're going down, but you don't want to do anything right now?
Yeah, I'm getting closer to the button. My finger's getting closer to the button after seeing like ETH's up 17% in the last 5 days or something. When the crypto market pumps, that's when I look to get back short.
I mean, ETH's overbought from all data I see. The stock market's like really overbought from all data I see. I think objectively speaking, if you want to get in, like the only thing that's like holding me back right now is all the events next week. When you have like all these like huge events and people are buying lots of like downside protection, it sort of creates this like, they call it like a Vanna flow, where after the event expires, that like that just massive volatility coming off the table like causes this like rise in assets. And like I've been worried about getting ahead of that for a while, but now I'm like wondering if that's going away now. I've heard people, I haven't looked at the option data in a while, but like I'm wondering if everybody's YOLOing into calls again now. Maybe that's like, it feels like that Santa Claus rally, like election thing became consensus like really quickly. And now I'm just like, wait a minute, does everybody think this?
I still think that could happen. Heading into the midterms, I think we're going to like see liquidity continue to come into the market. I think we're going to like see like the special reserve on the gas or the oil continue to be drawn down.
Are midterms next week or the week after? We only have
the week after.
2 weeks of this, right?
2 weeks.
And have you considered like what's going to happen with the markets versus Republicans winning the House, Democrats winning the House. Like I've been wondering if it seems like an almost certainty that, I guess we'll talk about this more in the next episode, but like it seems like it's almost certainty we're going to get it like a split House, right? Or split government. Isn't that kind of like bearish for like liquidity? Like we're not going to be able to push any more student debt bonanzas or giveaways like that through. It's sort of like an austerity thing
for fiscal liquidity.
Yeah,
yes,
fiscal.
I agree, because like there's not going to be too much. I mean, Biden's agenda is kind of, if the Republicans will, probably going to take the House, and if anything in the Senate's going to be kind of a toss up. So, his agenda is kind of out the window. Although you might see the Republicans come in and say, "Hey, we're going to fix the economy. You brought us in to do this. We're going to propose some legislation in that arena," but Biden's still got to sign off on it. So yeah, I think on the fiscal side, you're right, but that doesn't necessarily stop any monetary,
Well, look, here's my sort of flow chart in my brain. I guess you guys can sort of pick this out. Like what actually makes the stock market like really truly go up? I guess it would be a very persistent and rapid decline in inflation that is also not met with a precipitous decline in growth, right? And is there any other scenario?
Just a flood of the amount of money increasing. I could see that, but I agree. Like you have growth decelerating.
Well, what scenario do we just like unload the floodgates of money
and melt up?
Yeah, like why would that happen?
I don't think it will.
And then like the election's going to happen. We're going to have like a gridlocked Congress that's not going to pass stimulus, right? Unless the shit really hits the fan. We're going to stop getting rid of the strategic petroleum.
Yeah,
reserve.
you're out of your tricks.
What's his face from Saudi Arabia? I made that speech a few days ago where he's just talking about how it's going to be really painful. It's going to be really painful at some point in the near future. Xi's back in power. China's probably going to open up again at some point, presumably. Like I just don't see. I hate it when I can't make a case against. Like I'm like, am I so like blind right now?
I mean, I guess the only case is that it's priced in already. Is the only one I can think of that's possibly valid, right? I don't see any like triggers that would make us go back to all-time highs, but you could argue that it's priced in already. I'm not part of that.
I mean, like, but you could say definitively that it's not, right? If you just look at the earnings multiple of the S&P.
Yeah,
right?
and you could also say that recession is not necessarily guaranteed, right? I mean, it's not like the consumer's still strong. There's still earnings, right? Because they're able to increase prices faster than their inputs are increasing. So earnings could still be strong. Corporate balance sheets are pretty strong. Banks have enough liquidity. It's not like they had a terrible quarter. So you could say like maybe a soft landing, there's like a probability. I don't know what to assign it, but there's a probability that we actually orchestrate some kind of soft landing and we see decelerated growth, but not like a really hard recession. In that case, you could say, well, it's priced in now.
So they drive the car blindfolded and pull it into the parking space, basically, because they're.
I find it really hard to believe, and I don't find too much data supporting that. But yeah, I think that's one of the arguments.
To support that, I think I'd have to pull this up, but I think the average PE multiple has been slowly increasing over the last 60 years. So like, if we're still above the long-term average, like I think that would be sort of on trend as well.
Like the long-term average of multiples in the S&P tends to
go higher. It has gone higher over a long period of time.
I mean, okay, I guess that's the thing, but it just seems unlikely you get a soft landing when they're basically just doing all the tightening on the basis of this massively lagging data, and they're just going to sort of not stop until they drive the car into a cliff.
Yeah, I mean, I don't know. I still think that the best place you want to be in is as much cash as you can have, right?
Just buy T-bills at this point.
No,
right?
just
capitulate and buy bonds.
Keep it in cash. Be patient over the
4%.
next 12 to 15 months. I wouldn't be surprised if we see some left tail risk event happen in the next 6 months.
Yeah, we didn't even talk about that. We didn't even talk about the China could invade Taiwan. Russia's talking about like dirty bombs and
plus a lot of illiquidity in the options market. Like I think like having cash, buying during some kind of capitulation event, keeping even more cash. Maybe when the housing market takes a real shitter, you're able to buy a house in cash. In 2025, when interest rates start going down again, you take a loan on it at a lower interest rate, pull some cash out. That would be a nice little series of events. That's what I'm envisioning.
Yeah,
That's a nice.
never quite goes that way.
That's a great little dream.
Yeah, it's a great little dream.
Okay. I thought this conversation would be a little more cathartic for me, but I just feel stressed now.
You're in a good spot. You're all right.
All right.
Anything to wrap up?
No, I think you just be careful out there right now. It's definitely you get your head ripped off type environment now, I think, in both directions. Probably a good time to take your ball and go home for 6 months and see what happens maybe for most people. But if you're brave and you wanna buy a Meta down here, yeah, maybe.
What was the stat you gave me before we started recording on Meta? Just as
I was just looking at the trailing operating cash flow yield against the market cap today. Even in this after hours, it was like 18% operating cash flow yield
on the market cap.
On the market cap. So on Facebook, on Meta. So that's like very high. Like an average operating cash flow yield is probably like 6.5%. So when the operating cash flow yield gets really high, typically what happens is the price of the stock increases to have that yield normalize.
Right.
But I don't think that's probably going to happen anytime soon with Meta. They're just burning cash and, free cash flow is made up of operating cash and then investing cash and financing. So they're losing cash on the investing.
Would you consider that to be a value trap?
Yeah, sort of. I really think that it's probably a very good play in a longer term if you believe in like crypto, because they're like playing this game alongside us. They're like degenning with us, and I'm a believer. Zuck has like proven to be sort of a winner his whole life, so I'm a believer. I haven't bought any, but I'm looking at it.
Yeah, thought about it as well. Maybe we could talk about that another time.
Cool.
All right, cool.
Good to be
Wrap
back,
it.
boys.
Let's do it.
All right. Anything
right.
else to talk
That's
about?
it.
Yeah, that's it.
All right.
Good one.
Thanks for listening, everybody. Stay safe out there.
See you next time.
Bye.